Hello traders, today we want to do the multi-time frame analysis of Euro USD. This is a 1 hour chart, and as you can see, this is the start of a trend down here. So we have to determine where the beginning of a trend is. So we start drawing lines, ups and downs. We connect the high and lows. And the previous trend, as you can see, it's a sideways market, so I connect highs and lows. These are normal highs and lows. Okay, it depends on the trader. You know, sometimes people see very detailed, some people see very general, so it's up to you. Okay, what we want to do now is just draw some lines, like a trend lines and support and resistance lines. Okay, I start with trend lines. So the first one is gonna be there. The second one, as you can see, the price has broken the first one, and it's in the middle of the second and first one. Now we draw some resistance lines. So down here we have one, we have another one there, and this high here. So as you can see, this is based on the highs and lows that you determined in the previous step. Alright, it's not something that you just come up with. Here it just broke through the previous high, and then price retraced back up. It hit the top, the previous high, it couldn't break it, came back down. As you can see, if it doesn't hit the bottom, if it doesn't hit the previous low, that means that the price tends to go up. So it came back down, just like it took its breath, and then started to go up. It broke through but couldn't stay there, so it came back down. It's gonna take another breath, and probably it's gonna break through and go higher. So we have to wait. This is a 1 hour chart, so we have to wait for the next week. This is the Eastern now at the moment, so we have to wait for the next week, maybe next 2 weeks, see what happens. All right, I'm gonna go. This is the higher time frame. In the multi-time frame, we start with the higher time frame. We find a very good spot for entry, and then we go to the lower time frame, and then we check if we see any entry signal. So this is a 15-minute chart. So there are trends here, as you can see. This is one trend here. This is, so I can determine like this. This is one trend. This is another trend up to probably there. And then this is another trend in 15 minutes. So these are different sections, different trends. So there are 3 trends here. So if I want to delete these boxes so we can see it better, maybe I can put it here. So let me get rid of these boxes. So these are 3 trends. You can do that, but the only thing that we want is the previous trend. So the previous trend is very important for us. So I start to draw lines again, connecting highs and lows. So the previous highs and previous lows tells us what the price is gonna do in the future as it hits those highs and lows. So this is the new trend. We connect highs and lows, and as you can see, it broke through. You can put it there if you see a bigger more normal picture. You can put it here, a small consolidation place, and the last one that price goes up. For this section we go even in the lower time frame, probably 5-minute or 1-minute chart. So now we draw some trend lines again. We have one probably there, we can do it that way, and it broke through, came back up, touched the trend line, and it dropped. Now we're gonna do some support and resistance based on this time frame. So there's one, maybe we can draw it that way. Let me change the color, put it like that. This is good. Like that. One is at the top and one there. So as you can see, this consolidation area, price couldn't break through until it did, came back down, and it went higher. There's another consolidation area, a sideways market. The price was staying there for like maybe half a day, transferred to the next day in the middle of the, probably this is the New York Open, and it broke down and they came back to the same consolidation area as it was 3 days ago, 2 days ago, and it's staying there now. So what it's gonna do, for now we're in the range market. If we go to in the lower time frame, you will see this range market, exactly highs and lows, and we're gonna determine that. But for now, as you can see, the highs is exactly based on the previous highs. See here, let me change this color as well. Delete that one and put a, see how accurate it is. The price goes up, came back to this area again, and then it's consolidating exactly at the highs and lows. That's why the previous trend is the base for our today's analysis. So you have to have the previous trends, highs and lows, to determine, okay, what the price is gonna do today and tomorrow. We don't want to predict what's happening, okay? We're not fortune tellers. We just look at the price, what is doing and what is done. Then we decide what to do. You have to go back through price history and do this for like 100 times, 200 times, 500 times to find these patterns, what price is done based on the previous trend. And then you learn what it's gonna do in the future. Probably it's gonna do the same thing, because price moves in a certain direction and certain way, just like an elephant does that, a cheetah, a whale, an animal moves in a certain way. Okay, a rabbit is different from the from a lion. Price is, it moves in these ways. Okay, it reacts to the previous highs and lows. So if you know what happened in the previous, I don't know, 30 days, 100 days, probably it's gonna do the same thing. So you have to go back, look at the chart, find these highs and lows, and look at the next trend, see what happened when the price came to those highs and lows in the previous trend. And then when you come to the new trend, which you can see here, then you know what it's gonna do. So when it comes to that point, like this high, if it breaks through, this is the third time touching this high. Okay, in the trading community, traders believe that if the price touches a support or resistance line many times, that's a strong one. It's a strong line. It's a strong resistance line. It's a strong support line. Yes, it is. But as the price touches that line more and more, it gets weaker and weaker. Okay, it's just like you hit a wall with a hammer many times. Every time the wall gets weaker, right? So the price is gonna break through at the third, fourth, or fifth time. It's not gonna happen forever. So this is the third time. If we go to the 5-minute chart, still not visible much. Okay, here, as you can see, this is the third time price has hit this resistance line at the top. Is it gonna go higher? Maybe, maybe not. If we see any sign of breaking down, we can take a trend, and then we can find a very good entry point. But if it goes higher, that's what the traders make a mistake here. They try to catch the breakthrough. They call it the breakthrough. I'm gonna catch this. They put this is the strategy the normal traders do. They put a buy stop here, and then when the price hit this buy stop, they're in the market. But the thing is that sometimes the price, like this one, let me zoom in a little bit more. Like this candle here, you see, the price goes up, breaks the previous high, takes all the buy stops, and then crashes down. Everyone loses the trade. Okay, you have to wait until the price goes up, comes back down. At the retrace, you enter at the bottom. You know, there's a famous quote that says that buy the lows, sell the highs. You cannot buy the high. Okay, you have to wait until the price makes a low, goes up, comes down. At the bottom, you buy. It's just like a, you know, archery, the bow and arrow. You pull the string of the arrow of the bow back, because you want to shoot the arrow forward. So at the most, at the highest point, like when you pull it back all the way, that's the place that the price has the highest power to shoot forward. Okay, so now here, if the price breaks through, if the price goes up, we have to wait until it comes back down, and here we can buy. Okay, I can't draw this. Okay, probably in this area. You have to wait until the price goes up, retraces back to the previous high, and then it's time to buy. At this area, you can buy and the price goes. Not when the first time that it break through. We can't predict the market. We have to react to what it does. So we have to wait. This 1 minute chart, we have again, you can see this is the trend from here, the start of the trend. You have to determine the start of the trend and start connecting highs and lows. This is because you have to see the price movement very clearly. See, it broke through these highs here, and then you have bunch of highs and lows here. You can connect everyone, but you can do the main one. So far here, so we have one trend probably line here. The next one, we drew it from this one, and it's there. If it breaks through down, we have a resistance area here, and probably we have a small one there. So if it breaks through this line, you have to have two scenarios. Either it goes lower, comes back up, hits one of these two targets, either comes there or at this area. You have to enter here for sell, and then it breaks down. Or it goes up, breaks this line here, this very strong resistance line, comes back down. When it's down here, you can buy and it goes up. This is a multi-time frame analysis. We started from 1 hour chart. We have to see in the higher time frame what the price has done in the previous times, like previous session, previous day. We determine highs and lows. We draw some support and resistance lines. We draw some trend lines, and then we go down in the 15-minute, 30-minute, 5-minute chart. We determine a very specific area that is very like a resistance lines and things, and then we go to the lowest time frame, which is I go to the 1 minute chart. You can stay at to the 5 minute chart, doesn't matter. The price move in the same way. If I don't show you the time frame and give you the chart without the time frame, you don't know which time frame it is. It's the same thing in all the time frames. It's just that in the 1 minute chart the price gives you less, pips. So if you enter a price here from probably up to there, it's like what, 20 pips. If you go to the 5 minute chart, and in this area the whole thing is like what, 31 pips. So you have to know at what time frame how many pips you can get. So if you get half of that pips, it's good. So now we are at the top of the market. This is a very good sideways market. So if the price breaks down, goes under this resistance area here, and it comes back up, then we can enter a sell, and then price probably gonna go down to this line, resistance line here, roughly around this area. As you can see, this is a very strong area. So from here to there is what, 12 pips. If you can get like a 5, 6, 7 pips, that's good. But you have to find this pattern like 100 times, 200 times, 500 times in the past, and then you get it like a statistics, like average. Okay, how many times, like I don't know, 80%, 85%, 90% of the time, this pattern, when it happened, it worked. So you have a very good target point. So when this happens, you know that okay, with 85% accuracy, this is gonna work. Then you can determine your lot, the volume, and then when you, even if you hit the target, or even if the price hit your stop loss, it doesn't matter, because you know that 85% of the time this is gonna work. So next time you enter with a new lottage, and we're gonna recover the previous loss plus a little bit of profit. This is how you should do multi-time analysis of the price. And it doesn't matter what asset you're working on. Is it Euro USD? Is it gold? Is it pound? Doesn't matter. You go to the crypto market, same thing. You go to the stock market, same thing. The price moves in a certain way. But it's better if you work on one pair. It's just like you focus on one animal, and you learn its patterns. You learn how that animal moves. You know what it eats. Everything about that specific animal. So if you work on a certain, this is Euro USD. If you learn how the Euro USD moves, if you focus on Euro USD for some time, and you go through these patterns in the previous days and weeks and months, you know how it's gonna react to these highs and lows in the future. So you have a very good vision of how the price is gonna move. It's like a river flow. If you know that okay, this is a turn, this is up, down, then you can, as you can see, it couldn't break through, but we cannot enter here. You have to have these support and resistance areas. You have to wait until the price breaks one of these. You have to wait until the price retraces back to that area, and then you can enter. You cannot enter just because the price broke through this, or there is a pin bar, or whatever these candlestick patterns is there. This is how you enter the market. Okay, I'm gonna stop this, and probably in the next hour or next 2 hours, the price is gonna react to one of these areas. If I can record it, I will record it and upload it again. If not, in the tomorrow video, I will show you what happened in the last night. Alright guys, this was how you analyze in a multi-time frame way one asset to find the best entry point in the lower time frames. Have a good time. Bye.